Wow, what a difference. Oh, actually, there wasn't that much difference from a week ago. What am I saying? Anyway, welcome to this week's TradeSmith. I'm Courtney Smith. It's Monday, April 24th, bringing the hammer to the markets for over 45 years. Oh, my God, am I really that old? Oh, dear. All right, anyway, this never gets old. What can I say? You got to live it. You got to love it. It's so fantastic. But let's get into the market, because that might be a little bit more important. Now, as you know, I've been mildly bearish here for some time, and I remain so. Let's look at the S&P 500. Oh, and by the way, why? As I described last week, this is the Trump disappointment. We had the Trump pump. Now we're in the Trump disappointment phase. In addition, what the market's looking at is Fed policy, looking for the Fed to raise interest rates slowly but surely this year, and that's going to be a continual weight on the market. Now, that's a background feature. It's not going to be in the foreground, but it's still nonetheless there. In addition, I think that from a fundamental perspective, people are concerned that there's not enough progress on the economic front. Where's the tax reform? Where's the trillion-dollar infrastructure? These are the kinds of things that were promoting the Trump pump, and the market is saying, wait a minute, maybe they're not going to happen now, maybe they're not going to happen for a little while, and some people even saying, you know what, maybe they're never going to happen. And so the things that propelled the stock market so strongly higher, people are now taking a more realistic approach at the chances of them happening. So that's what's happening here in the marketplace. Recent economic news has been weak. That's not helping things out as well. So when you have a weak economy and the Fed is raising interest rates, that's not so good for the market. If we had had a strong economy and the Fed was raising interest rates, the market can withstand that to a certain extent. But this environment is not conducive. Now, I'm not calling for a bear market. Let's be clear. It's not going to go down 20%. It's not going to go down 20%. Did I mention it's not going to go down 20%? But we are in, I believe, a modest correction phase, maybe 5%, something like that. Now here, let's get into the technicals. Look at the purple predictor. Oh my God, it's just collapsing. This shows that the S&P is going to break out of what is a descending triangle formation probably this week. So look for that to happen. You need to be defensive. Put on hedges. Don't put on big positions, that kind of thing. Now, I have to follow my indicators. So my indicators are still net bullish. Another really positive factor is that we are in a market of stocks, not a stock market. So many sectors, many stocks are in major bull markets. For our fully paid up members, they all are seeing good gains in their portfolio in our fully paid up members section. But because there's so many sectors and so many stocks that are actually rallying. So even though we're in a correction phase, we can still make really good money. So this is a good correction phase, all right? Dow Jones slip sliding away. The DI plus is still below the DI minus. No big deal there. That's not the greatest indicator, I have to say. We're now below the 50-day moving average. That's a trend indicator, that another confirmation that we are in some type of a mini bear move or correction move. Over in the NASDAQ, however, does that look like a bear market? No. That says a sideways market. And you see, this is what I'm saying. The market is sharply bifurcated. There are many stocks in bull markets. There are many sectors in bull markets, but the big industrial stocks in the Dow and the S&P are not. And yet, over here in the technology-heavy composite NASDAQ, and it's going sideways. And the purple predictor is not collapsing. It's neutral. So this is what I say. You got to pick and choose your stocks. Our seasonality indicator has yet to turn bearish. And in fact, look at the purple predictor. The purple predictor is starting to go up, suggesting that we're not going to see a bearish seasonality move. The basic concept here is if it breaks below that bottom yellow line, then instead of being overweight your stock positions, you should be underweight or neutral weight. Haven't been in that situation. Our seasonality indicator has worked like gangbusters, kept us long and strong, kept us with big positions as this market has rallied. So right now, I got to stick with this. Can't really go to the sidelines yet, but we've got to be looking closely at that. We're still not up into the high in May that we're looking for. Then I'm really looking for more of a correction. So I just think we're in a little blip right here, but we will be seeing a more significant correction later this year. Yield curve has been a supportive factor. This is I put the yellow line where we were a year ago, because it's a year ago that actually is what drives the market today. I know it's unbelievable, but you should search on the internet for my webinar, a free webinar on how to predict the stock market 1 year in advance. This is an amazing technique. Okay, asset allocation, not helpful. This is not bullish. Our market risk indicator has now turned neutral and suggests that, well, the market could go up or it could go down. How's that for a deep insight? Over here, global shares, they're suffering the same as the U.S., but global shares have outperformed the U.S. market this year. But I just can't get excited yet. I mean, I think that still the action is in the United States. Bonds. Now, we told you about this. If it broke that top horizontal line, you got to be long bonds. So please be long bonds right now. Money's flowing out of the stock market and into the bond market. Now, I'm not looking for a major rally here, but maybe we get up to 127 from 124 where we are right now, something like that. So at least a minor rally. Now, bond key factors, this is one of the reasons why I'm not super bullish. Our key factors are neutral. CRB is slip sliding down, which would suggest lower interest rates. We see the 10-year Treasury in Germany going sideways, so that would suggest that interest rates here will stay the same. And then we see the price of gold going up, and that would suggest that interest rates would go higher. These three key real-time factors are what drive the bond market. Some of the critical factors. There are other factors, of course. All right, the dollar, though, with the weaker interest rates, with interest rates going down, we now have the dollar going down. And you can see it's been in a bear market now, really since the beginning of the year. I've been bullish fundamentally, and as you can see, that attitude has been generally wrong, but I remain fundamentally bullish on the dollar because of the higher economic growth, because of the higher interest rate for interest rate differentials, and so on and so forth. So to me, there's a lot of bullish reasons to be long the dollar. But the market doesn't agree with me, and I never fight the market. So at this point, I have no position in the dollar. Now, if the dollar is going down, that means that gold is going up. And we talked about that horizontal purple line last week. We had just broken above it, then went down. I said if we break to new highs, you've got to be long. Got to be long. What can I say? The market's in a bull market. And with interest rates going lower, that makes gold more attractive. Our gold short-term indicators. The top one is the euro. That's bullish for the dollar. I'm sorry, for gold. The CRB, though, has turned bearish, but the bottom one is the yen, and that's bullish. So 2 out of 3 bullish. That gives us the opportunity, the fundamental underpinnings for a modest bull market. Not a wild and crazy one, but a modest one. And finally, the oil market did exactly what I was saying. I said we'd rally up to that uptrend line, and then we should sell off. Not only did we sell off, we collapsed. All right, and by the way, I think we're going much lower. I think we're going to go into the low 40s. We're going to break below 45, but obviously the lows we made in March will be our first objective at around 47. But I think we're going to probably head back into the lower 40s. Oil is being pumped. Production is increasing faster than demand. Inventories are rising. We are going to be going into the summer driving season, which seasonally would give us some strength. But first, let's get a good hard dip lower. Let's reduce the price of gasoline by 30 cents a gallon. Then we'll get a really big bull market coming up later this year. All right, that's it for me this week. Thanks very much. Freebies. Love having you here, but of course, you know, the cool kids are all fully paid up members. So give it some thought. We'd love to have you as a fully paid up member. Fully paid up members, just hang in there for a second. Hey, Courtney Smith here, and I want to tell you about TradeSmith, our video weekly newsletter. Yeah, I've been bringing the hammer to the market for over 45 years, and now I share that expertise with you every week in a terse, to-the-point video newsletter. Now, see, back in the old days, I actually ran the #1 stock newsletter in the United States for 5 years, according to the Hulbert Financial Digest. I crushed the market. I went where the action was, and for 5 years, when I did this newsletter, it was the #1 rated most profitable newsletter there was. There's a picture of it. In addition, I also ran the #1 mutual fund, growth mutual fund in the United States. There it is. There it is. There's Morningstar. Look at that chart. Ooh, that's a beautiful looking chart there. And I was #1. Well, and no losing year in 40 years. I've been doing this for a long time, and I want to share that expertise with you so that you don't have to go through 40 years of experience. Trust me, I've bled a lot in those 40 years, but what that means is I've led a lot, and I've shown tens of thousands of people how to make money in my career. Now, first of all, in this newsletter, we're going to cover the key markets. We're going to talk about the U.S. stock market. We're going to talk about global stock markets. We're going to talk about foreign exchange. We're going to talk about futures, even commodities, oil. We're going to talk about bonds so that this is a one-stop shop. You can come here. You don't need anything else. We're going to use options whenever we have the opportunity to leverage up and turbocharge our profits. We're going to do it. Now, this is totally unique analysis. You think that if I did what everybody else did, I would have those #1 track records? Of course not. What I have to do is unique. That's the only way you can beat the competition out there year after year after year. So, deep fundamental analysis. I'm going to talk about this on two levels. First of all, fundamental analysis of the markets, monetary policy, economic policy, trade flows, all of those sorts of things, but on a very, very deep level. I've studied macroeconomics for decades now, and I've been using that analysis for decades. In addition, we look at deep fundamentals of individual stocks when we look at our stock market trades. That is to say, we're going to tear apart these companies. I focus a lot on a few key metrics. One of them, strong earnings growth. In the final analysis, that's the thing that really drives stock prices. Another factor that drives stock prices is when earnings per share estimates are going up. That is to say, when a broker changes their estimate from 10 cents a share to 20 cents a share, they call their clients buy the stock, and the price goes up. So those are the two most powerful techniques that affect the price of a stock, and I'm going to tear that apart and show you why I love these companies. But at the same time, just because it's a great company doesn't mean it's a great stock. We need to be able to time these things and buy them when it's good to buy and sell them when it's good to sell. So I'm going to show you unique technical analysis you can't get anyplace else. It's a combination of a number of indicators. Some of them you might have seen elsewhere, but I use them in a unique way. Others, you've never seen them anyplace else. I'm the inventor of those techniques. But you know what? Even the techniques that I use of other people, I use from people who are friends of mine. Yes, I've been around this market so long that most of the greatest technicians in history have been friends of mine. In addition, I'm going to show you ninja trading tactics. How are we going to get the best fill? How do we enter the orders? Are we going to use stop orders, or are we going to use limit orders or market orders? All of those sorts of things I'm going to give you in our weekly video newsletter. Key benefits of the newsletter. #1, killer analysis that you're not going to find anyplace else. This is unique. This is unusual. And I have to make it unique. I have to make it unusual because that's the only way I can be #1. By the way, I was voted #1 bond and gold market timer for 3 years in a row by Timers Digest. You can only do that when you have unique and killer analysis. Killer trades, because once we've got the analysis, we need to make money from it. We need to turn it into an actionable item, something that we can actually do in the real world. So I'm going to give you killer trades. I'm going to tell you specifically where to buy, specifically where to sell. Nothing is left to the imagination. I'm precise. It's also to the point. I don't want to waste time. I don't want to waste your time. I don't want to waste my time. So no BS, no stories, no jokes, no nothing. Right to the point. Here's what to do. Here's why to do it. And here's how to make money from it. So I'm going to keep it terse. It's about 20 minutes per week. Right to the point with all the analysis. I show you the charts right on the screen so you know exactly why I'm doing it. You can double check my work. If I show you an indicator and I say this is what it means, I'll show you the recent past and you can see if it worked recently. Of course, it does. Now, actionable. That's a key thing. So many analysts out there, it's blah, 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 blah. It seems to me that all they want to do is they love the sound of their own voice. They want to sound smart. You know what? I don't care if I sound smart. That's not the point of the exercise. I'm not here to try to impress you. I'm here to help you make money. I'm doing all the same trades that I recommend to you. So trust me, they better be profitable. Easy. Like I say, I'm going to give you the exact entry, exit points. It's going to be super easy. Just type them into your brokerage platform, and there you go. It can't be any easier than that unless I came over to your house and typed in the orders myself. It's only $47 a month. This is a peanut for what you're getting. This is killer analysis, killer trades. This is something where, you got to stop and think of it this way. Can I make $47 more per month if I subscribe to this newsletter, or am I not going to make $47 per month? You know the answer. The answer is, of course, you're going to make at least 47, probably 10 times that, probably 100 times that, probably 1,000 times more than the $47, depending on the size of your account and if you follow all of my trades. So also, I want you to have a lot of free bonuses right up front. As soon as you sign up for the first month, I'm going to give you thousands of dollars of free bonuses. A lot of them are options related because I'm an owner of a company called Options University, and we've got some great education there, from option beginner to pro in just 4 nights. I like using options if I can because they can turbocharge the profitability. They can also be used to cut risk at the same time. That's a pretty awesome combination. So I'm going to give you from options beginner to pro in just 4 nights. Great introductory course for an option beginner. I'm going to give you how to quickly and easily master the top 20 technical indicators, some of which I use, but of course, as I say, I often use them in tricky new ways, and I'll show those to you as well. Retire rich with 10x income. I love this course. Really, isn't that what we all want, is to retire rich? And hey, why retire rich? How about retire rich and early with 10x income? This is an awesome course. You're going to love this course. It's going to get you focused so that you can retire rich. The secret is out with gamma trading. Now, this one's more advanced. I'm not kidding you with this. Gamma trading, I used to be an options market maker in the institutional world. I didn't deal with retail customers, only with banks. And what did we do? We did gamma trading all day long. It's something that's so super sophisticated that very few retail investors ever really understand it. This course gives you the insight into how to do this sophisticated technique. So we started from option beginner at our top bonus. This one, advanced and very super cool. Another one is, I love this. Come on. We're going to give you a new option strategy every month. So what's going to happen is you're going to receive a new option strategy every single month for 12 months, give you a month to master the strategy for the month, and then learn a new one, and then learn a new one. This is a great concept so that you can learn in a relaxed fashion. Gotta love it. I'm also going to give you 82-page manual on candlestick secrets. This is a particular style of trading, using, instead of bar charts, using candlesticks. What's cool is it's got flashcards. It's really very cool because you actually get to learn just like you did when you were a kid. So it makes it super easy. You can be studying while you're sitting there on the subway or whatever, looking through those flashcards, the tutorials, the manual. It's awesome. And then finally, a very secretive part of the universe, foreign exchange options trading, where we combine foreign exchange trading with options trading profiting from the two hottest markets. So I'm giving you 7 bonuses here. The value, if you were to go and buy those, go to optionsuniversity.com. Check them out. You'll see the price is just under $2,200. So when you sign up for just $47 a month, I'm going to give you these 7 bonuses right away. You're going to be able to access them right away. So let's repeat. You get the weekly video briefing with actionable advice. You get the 7 valuable bonuses, and all for just $1.56 a day. Come on. Really? You don't think it's worth less than $1.56 a day? Come on, man. You can't get a Starbucks coffee for $1.56, but you can get one of the best video newsletters ever. In fact, I believe it's the first video newsletter ever. But you're getting the same insights and the same techniques that I used to build that incredible track record of being the highest performing, most profitable newsletter for 5 straight years. All for $1.56 a day. This is a peanut. So what do you got to do? It's simple. You go to bit.ly/weekly market forecast, and yes, the W and the M and the F have to be capitalized, but go to bit.ly/weekly market forecast right now to subscribe, get involved, full money back guarantee, of course. Do it right now. You're going to really enjoy it. I'm not allowed to promise you that you'll make money. The SEC, the FTC, they'll come down on me like a ton of bricks. But I know what my track record is. I think as long as you follow the advice, I think you're going to be very happy. I'm allowed to say you're going to be happy. I'm not allowed to say you'll make money or they'll come down on me like a ton of bricks. We don't like that. So here's what I need you to do. Go to bit.ly/weekly market forecast with the capital W, M, and F right now. Go there right now. Check it out. Sign out. Full money back guarantee. Get all the bonuses. Try it for a month. I know you're going to love it. Thanks very much, and I'll see you on TradeSmith. Thanks very much. Bye-bye.